We've gone into the year quite cautious. It's fairly well known that some of the main macro headwinds like the US dollar and obviously Trump coming in and potential tariffs are going to be quite difficult for Asia. But our preference at the moment is still for North Asia. One change we have made, we've been overweight Taiwan for a while. One change we have made is to sort of go on from underweight to neutral in Korea, particularly in the last few weeks of December when the market really got sold off on these political concerns. We are relatively cautious on China, particularly in the first couple of months of the year, basically driven by our view on further tariffs or sentiment of what happened last night's a clear example of that. And quite defensive in India. And I think we've talked about this a lot over the last few years in terms of India really losing a little bit of its shine in terms of the growth profile and needs a more monetary and fiscal policy to really justify the valuation. So quite cautious there. But in all, we think there'll be a very good opportunity for Asia in a few months to get more aggressive, particularly probably in China, because you'll see it lower levels, and also India when the growth comes through.
Sean, I mean, when we look at the performance of some of these stock markets out here in Asia last year, I mean, as far as the relative ordering is concerned, do you believe we're likely to see much of the same? South Korea, no doubt the laggard, but China sort of holding steady around the middle of the pack, no doubt thanks to some of that stimulus-induced rally around September. What's your outlook?
Yeah, I think it'll be quite similar to last year, that the beginning of the year will be very driven by sort of US-linked, Taiwan and certain stocks in Korea. And then I think we'll have a pivot when the dollar starts to weaken and Chinese growth comes through and there's more certainty. And I think you'll see, China and ASEAN and certain parts of Korea outperform. But I do think the interesting thing is there are many more levers out of Asia than there were years ago. And, we haven't mentioned Japan this morning, but, Japan, on the Value Up program, it took a long time. But over the last few years, you've had an enormous amount of money come out of Japan. I think it's $180 billion from foreigners. But you've had 220 billion bought by the corporate. So if that happens in Korea, it could be an incredibly interesting market. And actually last year there were some good value up opportunities in Korea, particularly in the financials and the insurance companies. It's just the larger holding companies, the law wasn't there to unlock them. And then you have that huge differentiation, obviously, in the semiconductor prices. So I think at the beginning of the year, it'll be more of the same, and then we'll get some very good opportunities. But you've got to remember, Sam, China was one of the best performing markets in Asia last year, although it didn't feel like it. It happened in a very short period of time, and I expect that will happen this year again.